Yo guys, welcome to another weekly market review session. Okay, so let's get straight into it. I got a lot of exciting stuff to share with you guys today. Now we are coming to the second week of October, and very interesting to see how the markets have played out. So I'm on my S&P 500 right now, and personally for myself, I think if S&P 500, okay, the markets can hold, okay, can hold around the 420 level this week, we can expect markets to start rallying back for itself, all right? Or from here on out to have essentially hit a low point or a bottom for itself and start to make its way back up, okay? So this may potentially be the bottom of this downtrend, okay? I'm not saying for sure, but let me show you the data that I'm inferring on why I possibly think this can be the current low that we are seeing, okay? Now, number one, okay, seasonality. So I'm sure a lot of you are familiar on this website that I've shared, Equity Clock, but basically it helps us to see the seasonality of the S&P 500 over the last 20 years. And very simply, you can see, again, month of October onwards, there is a rally for the last 3 months. That's how the market typically goes. And you can see if you go in specifically to October, when we come to the third and fourth week of October, we typically have a rally going up. Okay, so that's number one. Seasonality, S&P 500 is showing us that typically we have a rally towards the third and fourth week of the month. Okay, now second, if you look at this data over here, so this is from TrendSpider, okay, another great site for charting and for data as well. Now, on that, I thought this data was really interesting because you can see, again, looking at the seasonality over the last decade for the last 10 years, okay, tends to be the last quarter of the year is the most bullish and where we see the most strongest recoveries and wins being made. Okay, so again, really solid stuff from the S&P 500 towards the last decade from this data. And lastly, okay, so this is the VIX seasonality. Again, this is found on Seeking Alpha. You can go and search it for yourself. But another interesting data that I found from this was, very simply, you can see for the month of September, October, November, and December, typically, if you look very carefully, the VIX spikes, all right, to its highest around the end of September to early October for itself. And once then, it starts to go down. So for those of you who don't know what the VIX is the volatility index. It moves inversely to the market. Okay, so if the market is going up, the VIX comes down. If the VIX goes up, the market comes down. All right, typically they work inversely of each other. So if you can see, okay, for September end and early October, typically that's when it spikes for itself and then it starts to come down, which means the VIX comes down, the volatility comes down, but markets are going the other way. Okay, so these three evidence or these three data is what's making me infer that we may possibly have hit the bottom based on a fundamentals perspective. Okay, now on a technical perspective on the charts, if you take a very close look, okay, number one, you can see, okay, that last week we had a big rally in the market, and this candle over here very clearly is a bullish engulfing or a big momentum candle. It's what I like to call it. All right, so it's a big momentum candle from what you can see. Not the cleanest bullish engulfing, but really strong momentum candle. Okay, so typically, again, if you refer to the previous bottom, all right, so previous bottom where we started to have this entire rally back up, all right, so you can see we started from October we hit the bottom and this rally back up. You can also see that at that point when it hit the bottom right here, guys, okay, right here over here, bullish engulfing signaled the bottom and then instant reversal up. Okay, so again, I see some similar patterns repeating. Okay, now we've got this huge momentum and bullish engulfing as well. Could be a pattern that's repeating again. Okay, now we look at the 5 minutes again. You can see last week, okay, we had a gap down, This, I think, was about 1%, right? About a 1% move down. This, and in the end, we had a major rally and pump back up, even going past, okay, and closing my gap. We had a pullback later on. So this was about around midnight for ourselves. And then it continued to go up even higher. Okay, so very strong momentum from the S&P 500. Now, if I refer back, guys, all the way to October for ourselves, right? So October 2022. Okay, so let's just take a look back in history. Okay, this date, all right? So you can see in October, the day the bullish engulfing that I showed you guys happened, we had a big gap down. And I think this was due to CPI data at that time. And then there was a major rally and pump back up, closing the gap and going even higher. All right. So that's the thing about technical analysis, guys. It's patterns repeating each other. Okay. Human behavior. We always say history repeats ourselves. We tend to react the same way. So this, on a technical perspective, I see some correlation of what's happened in October and what's happening right now in the markets, which is why my inclination is we possibly may have hit the bottom. And of course, right now, for those of you who are keeping track of the markets over the weekend, a war broke out in Israel. Now, this is not something anybody could have predicted, okay? And typically, events like this, when there's a war, it does cause volatility in the market. It does cause sudden drops in the market. These are black swan events you can't predict. But if we can hold my 420 level, okay, you can see over here, we can hold my 420 level, then I'm very confident that we can possibly keep this momentum going. All right. So now you can see, all right, pre-market, we have a gap, all right, because of the news. Okay, so if I go on CNBC, let me show all of you. Okay, so you can see straight off the bat, guys, CNBC, again, Israel orders complete siege of Gaza. So this whole war between Israel and Palestine has been going on for many years, okay? But this war, new war just broke out, okay? So again, because of that, you can see the gap down and current drop, all right? About a $3 drop thus far, okay? But if we can maintain at these levels, okay, for today and for this current week and hold and start moving back up, and can go above here, okay, which is about 430, I will still say we have bullish momentum. Okay, now why am I specifically choosing this? Okay, very simply, if I do a simple Fibonacci, okay, I take the bottom over here, I draw all the way to the top. Okay, you can see my 50% is around the 425 to 426 level. Okay, very, very clear. You can see that's what happened. Okay, very, very clear levels. Now, if I go back, okay, so if I go back in time, we go back to October. Okay, we take October where the bottom hit in the market before we had this massive rally. We're not so clear, guys. Let me do on the 1 year, 1 day. That will be a lot more clearer for all of you. Okay, here. All right. So again, let's do it on this bullish engulfing candle. This was that day. Okay. If I just measure this candle, okay, you can see very nicely over here, this candle, when it pulled back, okay, when it had a down day for itself, it held my 0.5 level. This was 352 at that point of time, but it held my 50% level. So of course, it will test slightly deep for itself underneath, but it held and went up. Again, the previous candle before it as well, when you see, it came down and held that level. So same thing as well, okay, for the markets today. Again, black swan event like this, nobody can predict, but if we can hold, okay, my levels that I told you earlier on, which is around, okay, around 425, 426, okay, dips slightly below, it's fine, okay, but if we can hold around these levels, then we will definitely have further movement up for the markets, okay. Now you can dip down to 61.8, it is fine, okay, as long as it holds around this area, okay, my 0.5 to 61.8, we are good and we are safe, okay. So this is how the markets are looking as of now. Now, a couple of things to take note, guys, okay. Another factor to consider is Forex Factory. So this week, okay, I want you all to see Thursday, everybody, CPI data is coming out. Okay. So again, how this data goes, if it shows that inflation is maintained or coming down, then it will prompt the Federal Reserve to keep interest rates where they're at and not hike it. But again, if it goes up, then it may signal that they want to hike interest rates and it might cause some volatility. So how this data goes and how investors and traders react to this will be key in playing a part on how the markets will move. Okay, so look out for this data on Thursday because the volatility and the movement that this comes out of will affect the S&P 500 and the markets and will dictate the direction. Okay, so very, very exciting stuff. If we can hold, again, now we are close to my 426, 425 pre-market. If we can hold here again and CPI data comes out good, the market reacts positively, we can have that movement up. And I can tell you essentially with confidence then that we would have officially bottomed out at this point here. Okay, so again, stay appeal to the markets, stay tuned and continue to monitor, especially for this week, Thursday, see how to approach the markets. Now, what can you do for yourself in terms of your trading, in terms of your investment? Very simple. Number one, swing trades. Okay, at this point of time, I wouldn't be doing swing trades. Okay, plainly simply because I can't get a good gauge of the direction. It is still chopping sideways, it's still coming down for itself. Even the movement down is not very clear as well. So swing trades, I would still be avoiding that. Okay. Number two, day trades. Now, day trades is the way to go in this market. Keep up with the day trades. Again, catching a movement like this on Friday last week would have mean massive, massive, massive profits for yourself. Okay. So again, day trades, keep it up. Keep doing that. That's what's working well in this market. Third thing for yourself, if you can't do day trades or because you're not a short-term trader, it's too volatile, swing trades is what you prefer, but you can't do it, then position trading is your next best option. Okay, so at these levels, okay, with the gap down today, accumulate shares, all right? Accumulate shares in positions like Apple, Google, Microsoft, all right? All these well-known companies, fundamentally good companies, accumulate shares in them, okay, for position trade. So again, what is position trade? You're not looking to hold them for investment, okay? 3 months, 6 months, maybe a year down the road, you're looking to sell them at a profit. Okay, so position trades, these are levels where you want to accumulate, you always want to accumulate the shares at a low or a pullback, and this is still the opportune time. Okay, now investments. Okay, for investments, definitely still levels that you can accumulate for yourself. Okay, very simply, if I throw on my SMA 100, we are already below my SMA 100. Let me just throw my MAs over here. Okay, again, already below my MA 100, already close to my MA 200. Again, guys, this is levels that you want to add your shares for yourself. Okay, so please go ahead. In terms of investment, I think these are good levels to add your SPY, your QQQ for yourself, SPYG, TQQQ. Okay, fantastic levels to go and add shares for investment, meaning I'm talking about a couple of years, all right? 5 years, 10 years, 15, 20 years down the road, okay? ETFs, these are the fantastic levels to add shares, okay? So again, swing trades, no for me. Day trades is a yes. Position trades is a yes. And investments is a yes for myself. Okay, so I hope this gives you guys clarity on how to approach the markets this coming week. Okay, exciting stuff. October, November, December. I always look forward to the last quarter. Fantastic stuff. Okay, so let's hope the markets treat us well. Okay, the movements continue as to what I have suggested today, and we continue to trade safe and what in the markets. Okay, so from me, guys, take care, stay safe, have a good trading week ahead, and I will see you next week.